Today I'll be showing you an extremely easy option strategy that you can do on a stock that you are bullish on. So with all the recent news about Twitter, this is a great example to show you on because most people think that Twitter is going to go up with all the things to do regarding Elon Musk buying it and that sort of thing. So we're going to come over here to Twitter for this example, and we're going to come over here to trade Twitter options. So this strategy is called a broken wing. So we're going to come over here and we're going to go to where we think Twitter is going to start rising from. So for this example, I'm just going to say that I think Twitter is going to start rising immediately. So the share price is $48.99, so I'm just going to buy a put right underneath that share price because I think Twitter is going to start rising now. So that's the first piece of the strategy. So we buy a put where we think Twitter is going to start rising from. So if I think it's going to start rising now, I'm going to put it right there. Now we're going to sell two puts above the put that we bought. So for example, I'm going to go up two gaps. I'm going to go 1, 2. I'm going to click there, right there. So we're going to sell two puts. We can only sell one right now, and I'll show you how to customize that in a second to get it to where we need it to be. And then, by the way, I've chosen May 6th as my expiration date, which is 5 days away from now. So if I think it's going to start rising immediately, then I'm just going to choose a couple days out. But if I think it's going to take a while, then I'll choose one of the further out expiration dates. So we're going to sell the puts there with a gap of one strike price in between, and then we're going to buy a put one above the puts that we sold. So it should look something like this right now. You come over here and it's going to look weird, and I'll show you how to fix it to sell two puts, and that's going to make this all look normal. So come over here, click this drop down, click on custom, and then find the ones that say sale, and we're going to click there and make that 2. There we go. So now we're selling 2, we bought one above, or we bought one below, and we bought one above. So now this is what it should look like. So this is the current trading price of Twitter, is right there on that line. And then as long as Twitter starts going up, we're in the green. We're going to make profit easily. So this is a stock. You want to do this strategy on a stock that you know is going to go up, or you're almost certain. And if it happens to go down, once it hits 48.50, which just happens to be this limit that we set right here, once it hits that, then you're down $30, and then that's the max that you can lose. But as long as you think the stock is going up, then you'll be in the profits easily, and you'll be set. So I'm going to come over here, and we're going to show you a little bit of a better example. So come over here to option strat. We're going to put in Twitter. Make sure we choose the correct expiration date, May 6th. And then we're going to click build, put broken wing. So make sure Twitter, May 6th. And then all we're going to do is we're going to copy this setup right here into option strat, and it'll show us really detailed results day by day. So first, let's do the put that we bought at 48.50. So we put at 48.50, and then we sold the 2 at 49.50. So the bottom one's right here. You see the times 2, so 49.50, and then we also bought a put at 50. Come over here, put that we bought is on top, and then 50. There we go. So this is a little graphic to see exactly by the times of the days of the week exactly where it's going to have to be for our profits to see the dollar profits that we'll get. So right there it's trading in the around 49, so you'll see that dotted line right there. As long as it starts going up, we'll be in the green, and then you can see the profits by the time. You can also move the range around to see a little more specific results by, the cents changes. And then you can also mess with the implied volatility if you think that that'll be a difference. We'll just reset that to how it is right now. So yeah, this is a great option strategy on a stock that you can do that you think is bullish. For example, if you think Twitter is going to go up right now because of everything going on with that, you should try this out on there. I would recommend making sure that you look this through, go over to option strat and check everything so you can get a full detailed explanation of what the prices are going to be at what certain times of the days of the week. But yeah, besides that, if you have any other questions, comment them down below and I'll be happy to answer them. And yeah, thank you for watching.